All right, everybody, ladies and gentlemen, good evening and welcome to us here at ATFX. My name is Philip and I will be your presenter for today's webinar. Today, we want to have a look at trading breakouts. What are breakouts? How can we trade them? And have all breakout trades and breakout setups actually been created equally? Or is there a difference? Is there something where we can say that some type of breakout makes a little bit more sense, helps us to stack the odds a little bit more in our favor than other types of setups? If you look at your webinar interface, you can see that small questions box. Right now, I would appreciate a very short yes or why in that box to actually, so that you guys can let me know that you can see the screens changing, that you can hear me well, so that we have the technicals all sorted out. And throughout the course of this webinar, please, if you happen to have any questions, if anything is not clear, if you have questions considering my chart settings and I don't know what else, please don't be shy. That's what we're here for. We want to learn something together. Asking questions is really a vital part of the learning experience. And for that reason, please, I urge you, don't be shy. Ask me your questions and I'll do my very best to answer those questions as we move through the webinar. Thank you very much, everybody. Perfect. Thank you much, everybody, for the feedback. Technicals have been sorted out. Everything's up and running as normal. Glad to hear it. Today's session is scheduled to run for around about 1 hour. And of course, before we get started, you already do see those first risk disclaimers here on the screen. I have to make you aware of those. So please take a moment of your time to read through them carefully. Make sure that you're comfortable with them before continuing with the webinar. Essentially, this says that trading, of course, involves risk, and you should understand those risks and the risk associated with the instruments you're using before you're getting active in the market. As neither ATFX nor Traded Position nor myself are registered investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live part, which is the whole webinar, essentially. We will be looking at the charts together. I want to explain to you guys what I'm seeing on those charts. It's not that I want to tell you that is the perfect setup here right now. Rush in and take that trade. I feel that this doesn't make any sense. You must own your trades. You must have a trading strategy, and you must understand why you personally think that this is a good trade to take, why this trade makes perfect sense to you. And so the only thing that I can do is I can explain to you guys what I'm seeing on those charts, why I think that certain setups might be a little bit more might have a little bit higher bit probability of being successful than others. Talking about probabilities here, let's get one thing absolutely clear. I have losing trades and lots of them. Wow, so how do I make money as a trader? Why am I here to run this webinar for you guys? How do you make money in the market? Well, it's not about having only winning trades. This would be so nice to do. Unfortunately, I'm afraid only liars can do that, because trading is always about being able to handle and think in probabilities. We will never, even with the most perfect setup of them all, be able to have only winning trades on our hands. There will always be losing trades. Even if the chart is perfect, the setup is there, all the stars have aligned, most beautiful setup of them all, and still you can lose money on that trade. So if we don't know if we're going to be a winning trader on that next trade or not, how can we make money? It's all about probabilities. It's about having a positive expectancy. And this means I want to win more trades than I will lose. And those winning trades should give me larger returns than the cost that occurs with having those losing trades. So winning more often than losing and winning bigger. And those two things coming together, and this over a large sample set of trades. This is how we make money in the markets. It's not about the next trade. The next trade can be a winning trade or a losing trade. It's about the next 100 trades. It's about the next 1,000 trades. We have to start to think in probabilities. One trade means nothing. So the only thing that I can do is stack odds in my favor. I can analyze this chart. I can find little advantages, and those little advantages help me to say scenario A should be a little bit more likely to happen than scenario B. And a lot of little bit more likely than will finally result in that I should be able to win maybe 60 out of my 100 trades, maybe even 70 out of my 100 trades. But I will never be able to know upfront if that next trade will make me money or not, and if the next 10 trades will make me money or not. It's all about probabilities. So what I want to do here today, I want to show you the way that I look at those charts and how I try to stack those probabilities in my favor. So everything that I do is just let you guys look inside my head. Might be a scary ride, sorry about that. But it's just what I'm seeing on those charts. And even if I like a chart, it's always just my opinion. And that one trade means absolutely nothing at all. Please make sure you understand that this is just for educational purpose. And that being said, let's just get started. The do's and don'ts of forming a breakout level. Everybody has seen breakouts and they should pretty much work all the same. We don't feel that way. We think some breakouts are way better than others. We want to discuss this here today on the charts. How to increase the probabilities of success of trading breakouts, gathering small advantages, stacking the odds in our favor, and of course, all of this on the live platform, MetaTrader 4 platform. And we want to see if we can find something setting up here right now. We want to wrap up that session here with an outlook. And if you haven't opened your account with ATFX now or yet, what are the advantages that you guys have when trading here at ATFX? That being said, let's directly head over to the chart platform. And guys, before we get started here, a quick technical hint or support question. One of the techniques that we like to use are pivot points. And the nice thing about the MetaTrader 4 platform, don't get me wrong, I'm not fully happy with MetaTrader 4. But it's a very powerful platform. Why? Because you can easily extend it by pretty much everything that you can think of. And one of the techniques that we like to use are pivot points. And just in case you haven't installed the indicators here, quick disclaimer up front, those indicators here can be downloaded here from the URL. Let me just quickly copy that URL and paste it directly here into the chat box. Just a second. Type message here. Yes, that's what I want to do. You should now all be able to see that link. Do you have to use those indicators? No, you don't. Can you use them? And I will show you how we use them. Absolutely. And it's absolutely free. There's nothing that you have to pay for either those indicators or for any other of our services here at ATFX. I don't want to sell you anything. There won't be the sales pitch at the end of the webinar. And by the way, you have to subscribe to our service. No, absolutely not. Everything that we do here has been taken care of. And in the end, it's very simple stuff that we do here. We're just reading price action, and those indicators just help us to spot certain aspects of price action. So that being said, this is one of the indicators that I will be using here today. And just in case you're wondering how you can get that one, the link is in the chat box. You can easily use that. Now let's come back here to our charts and MetaTrader 4 platform. And all right, how do I start to look at markets? Well, usually I'm starting all my analysis always on the daily chart. I feel that the daily chart tells me the big picture. The big picture, what is the stage like? What's happening? What is the context of this market, of this market move? So we're looking here at the British pound, Swiss franc on a daily chart. And the way that I'm looking at those charts, the indicators that I'm using stays the same, independent of the market that I'm analyzing and independent of the time frame that I'm analyzing. So what are we looking at here? The black moving average is a 10-period moving average. The blue is a 20, the red is a 50, and the green is a 200-period moving average. And it doesn't matter if you want to use the exponential moving average or a simple moving average. That being said, how do we use those moving averages? Well, I want to trade only trending markets. I want to trade when I see the market has started to push in one direction. And the easiest way for me to do this is I want to see that price is making lower highs and lower lows. Let's grab the crosshair pointer here. Lower highs all along the way and lower lows. And as long as I see that series of lower highs and lower lows, I know that this market is in a downtrend. And it doesn't have to be precise if that's the low or if that was the low or if this candle makes the high or that candle. No, here is the high. That's the point. Other point is here. You see, I don't need an indicator for that. I just look at that chart and it should scream at you, yes, I'm a high, I'm a low, or at least in this area should be the high and the low. And that's it. This is a downtrending market. However, spending some time to trying to see those highs and lows, it can be easily done. But if you want to do that over a few, let's say even you want to scan a watch list of 100 markets, this can become a little bit of a slow process. You don't want to do that. You want to have scanning efficiency. And one way we can improve the scanning efficiency when we're looking at those charts is looking at our moving averages. Because I only get this structure of those moving averages. You see, the 50 is clearly below the 200. 20 is clearly below the 50. 10 is clearly below the 20. That structure is only there if this market has been trending lower for some time. So quick glance at that chart, I see that structure and I know that a healthy trend, or at least a strong trend, has been established and has been going on for some time. If the market is doing things like this or things like that, I'm not sure what's going on right now. The market does not give me that trending environment that I came here for and that I came searching for my trading opportunities in the first place. So structures like that, I like those structures. Here right now, it's getting a little bit more fuzzy. However, that being said, what is currently the trend here on the pound against the Swissy? We have highs, we have a higher high. Now, where's the next high? I'm just moving sideways and I'm seeing, wait a minute, that's the high. So this is now currently a lower high. The price has dropped further and came back and formed another high. And comparing this cluster here, yes, it's very close to that one, but still it's a lower high at that stage. So sure enough, price has made a series of lower highs. That was a low, and this was a higher low compared to the previous one. But now price made a lower low compared to this one, and the next low was pretty much in the same ballpark, in the same area. So what's currently the trend? I see lower highs and I see that price starts to compress. Is it a perfect trend right now? No, it isn't, because obviously I don't get those lower lows. But instead of giving me lower lows, this market is now about to establish a so-called flat horizontal level. And I can easily draw that flat horizontal level. I'm just picking here my horizontal line tool and I'm just clicking somewhere and this line appears. Double click on the line and you see those small handles appear. Now I can just grab this line and I just draw and drag this line upward. And essentially, this is how I draw those lines. I just pick those lines, I move them around, and I want to see that actually price has reacted to that same price level several times. What I can see now is that price has reacted to this price level back here in the day and here. And once again, a little bit of a reaction here, acting as resistance, moving higher, acting as support, pushing lower, a little bit of support here. So overall, the market has reacted to this price level several times in the past. Now, question time. Is this just a magic number? Is this just some kind of miracle happening? Of course not, absolutely not. What we're seeing on that chart, and my professors back at university, they always told me, Philip, there is no merit in looking at charts. It doesn't make any sense. It's just like trying to read the tea leaves in your teacup. It's just, yeah, it's just like looking and staring into that non-existent crystal ball. I disagree. And I had a long time thinking about why I disagreed and how I could reason and logically explain why looking at chart makes perfect sense to me. And I think it's rather easy. I'm not looking at price. What is it that we see on that chart? We can see the result of people behaving and acting in the markets. And price, I can't see those people. I can't look inside their heads and see where were they when they bought or sold that market? What had they been thinking? I can, however, see the price at which they traded. And that's the observable result. So looking at charts is just a second level map of people acting in the markets. And if people thought that this is an interesting price level and we should wait a little bit before price crashes lower, a little bit of buying happened here, a little bit of selling happened here, support setting in here, and again, acting as resistance here, people had positions around those levels. People acted around those levels. And for that very reason, I feel that if people initiated positions here, maybe they still have those positions when price is back here again. And guess what? Price comes back to this level. Well, their P&L, their profit and loss is now down pretty much to zero if they haven't closed their position up front. And here again, and people rather short-term oriented might think, wait a minute, if price approaches this level and people paid attention to this level before, they're buying this level now because obviously they think, yeah, buyers will be stepping in again. And this is what we can observe. Buyers are stepping in. And then buyers are driving price higher until sellers take the lead. Sellers take the charge. And sellers started to sell this market here around this price level. Let's make it a little bit larger here. Around about this price level. And back again to pretty much the same price level. Now buyers came back, drove price higher again. But guess what? It's not to the same level. It's a little bit lower. I would have preferred if it was by a fair bit lower, but still it's a lower high. So sellers became more courageous, if you want to put it like that. They started to step in earlier, and so price is now about to push up against this level here once more. That's the basic idea here. And the type of breakouts, and this actually forms a breakout. Price is compressing against a flat horizontal level. And why a flat level? Everybody and their dog will tell you that you have to draw sloping trend lines and trade the break of those trend lines. Well, you can easily draw, sorry guys, you can easily draw sloping trend lines like, come on, like that. Price broke that trend line. Did everything fall apart? No, it didn't. And I'm just curious. I'm really curious how many people of you would have actually have drawn that trend line exactly that same way. Because I feel that if you ask 10 people to draw trend lines, those 10 people will probably give you at least 12 different answers. You could now also argue, wait a minute, that's not the correct way to draw this trend line. We should be going for this trend line here instead. When a break of that trend line, however, price just came back and moved higher again, breaking the trend line again. I have a certain beef. I have some issues with those sloping trend lines. And the idea here is, first of all, they are not really that clear. They're not that precise. And let's be honest, why are people paying attention to this level? Because people reacted at this level in the past. And as this level is horizontal, it stays at the same price level all the time. Price is just moving side this level. I don't care if we test this level again in 20 days or in 20 years. This level stays at the same price level. It doesn't change. If you intend to trade a breakout of that sloping trend line, tough time, because guess what? The value of that sloping trend line changes every single bar, which means you have to modify your orders every single bar, you have to adjust your position sizing every single bar, and so on. First of all, not that clear, not that precise. Next of all, very difficult to trade because obviously those numbers are constantly changing. And if you draw this trend line differently than I did, maybe I screwed up, it doesn't matter. But if we two are not looking at the same trend line, I will not react upon that trend line that you are seeing on your chart. Which means if people look at different things and people tend to trade around different price levels now, you will not have that consolidated, strong move in the market. I can assure you of one thing. The big boys are looking all at those horizontal lines. Even traders, which coming back one step. Do I suggest sloping trend lines are bad and you never ever are able to make money trading sloping trend lines? No, absolutely not. What I want to show you guys here is our style of trading. I do not want to suggest that other styles don't work. I do not suggest that you can't make a killing trading sloping trend lines. It's just not our style of trading. We feel that if you trade only horizontal lines of support and resistance, that this helps you to stack the odds in your favor better than trying to trade breakouts of sloping trend lines. However, if you are the master trader of sloping trend lines and this works for you like a charm, keep on doing what you're doing. There is not one way to crack this game. Many different ways are there to become successful in the markets. Ultimately, you have to find something that works for you. I just want to give you a little bit of guidance, what is working for us and what we are using in our everyday trading here. M is asking, as a beginner of 2 years experience, you're no longer a beginner. You have definitely earned some good experience there already. Let me show you that. Would you suggest that I hedge positions when the stop loss hunt ends? Maybe you could elaborate a little bit on your exact game plan there. Talking about stop losses, let's do it that way. While you might fill in the gaps here in that formulation and help me a little bit better to understand what you mean, I explain further what I'm seeing on this chart and how I would trade here, that potential move and where I would put my stop losses. And maybe that answers your question. And if not, I'm happy to come back to your question there. All right, you're referring to the different sessions and the Asian consolidation. Personally, when I'm trading Forex, I don't care about the different sessions. I don't care about the different sessions. I'm trading what I'm seeing here on this chart. Funny thing, I'm with Trade with Precision, and obviously we are many traders here, many mentors, coaches, presenters, and so on. And obviously, as such, we are also located across different time zones, pretty much all across the different globe. And when we had our chats and discussed our setups, at one stage when I freshly joined the team, I said, come on, guys, I don't see those setups that you're talking about. My chart looks completely different. Yeah, what are your time zone settings? And we discussed about that. And in the end, you trade what you see on your chart. If you think it makes sense to adopt your chart to start the day at GMT, perfectly fine. If your trading session is the London session, perfectly fine. In the end, it doesn't really matter. Our founder, Nick McDonald, is a Kiwi. He came to London, he started his trading there. And at one point in time, he said, I want to go back to New Zealand. And his fear at that point was, wait a minute, all those great setups that I'm trading every day during the London session, I will be fast asleep when the London session is going on, when I'm back in New Zealand. And guess what? He found equally good setups during the Asian session when he was back in New Zealand. You trade what you see on that chart. Just be consistent. Don't flip around the starting period, start of day. Just stay consistent there. So that being said, I do not care about the different sessions. If I intend to trade that breakout here, and it's not a breakout yet, and by all means, it's just where would my stop loss be? My stop loss would, in this case, just be above the high of this candle here. Obviously, I want to see that price pulls back to test this level once more, gives me another lower high, and then I might be tempted to move that down to match this new lower high that I saw there. But what I'm seeing on this chart right now, that would be the logical place for my stop loss. At the very moment I feel that it's a good point in time to submit my order, I will always submit my order along with my stop loss and probably a profit target as well. Mental stops just don't work for me. I'm completely frank and honest here. Mental stops don't work for me. I'm sitting like that rabbit in front of the snake. Price drops to this level and beyond, and I knew that I should have been out at that stage. And I'm just hoping the price comes back, and it's a mess. It's a complete mess. It's that mess that you can read about in pretty much every beginner's book. No, I want to have my stop loss in place. And maybe if they come and hunt my stops and take out that stop, so be it. Guess what? That type of setup works more often than not, including that stop hunting. If you do everything perfectly, I'm able to win those setups far more often than I will lose them. And this is what I need. If this one trade goes away, so be it. Who cares? One trade means nothing. And guys, this is why trading is actually so difficult. You have learned to become a doctor. You have learned to become a pilot. Obviously, how well you perform your tasks is 100% correlated to the outcome of your actions. If you screw up as a pilot, happy landing. If you screw up as a surgeon, yeah, not so good for the patient. We as traders, we perform everything perfectly on our chart. And still it's perfectly fine if that next trade is a losing trade. And this is so hard to understand. This is so hard to wrap our heads around and accept this. This is why trading becomes so freaking difficult for pretty much everybody. The outcome is no longer directly correlated to how well we performed our task. One trade means nothing. 100 trades, a large sample set of trades means everything. So just keep that in mind. John has been asking, do you have any tips on avoiding false breakouts? Before we come to the false breakouts, Chitin, and I hope I didn't butcher your name here too much. Chitin is asking about what would be the entry price and risk per trade for you. Great questions. Let's talk about that. Let's just assume that this push lower really happens and I get a much tighter entry. This entry here is far too wide for my taste. I like to see small candles for the setup because small candles usually allow me to push my stop loss far closer to my entry. And why is this important to me? Well, if my stop loss is closer to my entry, I can trade a larger position size and I will be able to hit my first profit target earlier. So two components here. Let's talk about the entry price. Obviously, I think price might be about to push lower here below this level. And if this support finally falls, I think there might be decent opportunity for price to actually push lower. The idea is this whole breakout should feel like some kind of volcano. You have that sealed crater top and a lot of pressure, a lot of magma is rising within the cone of the volcano. But the top is sealed. All those hot fumes don't have a place to go. They just sit there and more pressure is building up. And this is what I want to see. And this pressure building up is what I can visualize by seeing smaller candles, and those relief rallies back here become ever so shorter, ever closer to this breakout level. And at one point, buyers just say, wait a minute, this market is going nowhere. I stop buying it all. At the very moment we dip below this level here, it's off to the races. And what I want to see there is a huge candle going lower, and I want to participate on that move lower. So how do I enter that potential trade? I would enter that trade with a sell stop order just below this level. Why sell stop? Why is it that I don't want to jump the gun and sell now for a higher price? I could get more if I sold this market right now. Why am I not selling right now? Why am I instead waiting to see the price dips below this level? I don't know if this setup will occur. I just don't know. I don't know when this setup will occur. And I don't know if this setup will be successful or not. 3 big question marks if I sold that market right now. And I can eliminate 2 of those question marks, but I have to pay a little bit for that. And I have to pay a little bit means I'm not entering that position here, but I'm waiting to see the dip below this level. Because as soon as price dips below this level, I know that the breakout is occurring right now, because right now we are dipping below this level. So A, yes, it occurs. B, when does it occur? Right now. I've waited until the breakout actually starts. So those 2 things are now in my favor. Yes, I had to pay a little bit for this. And the difference is entering here versus entering there. But I'm willing to do that. Because those 2 components, adding again probabilities that this breakout will move, will work for me, will go in my favor. Will this breakout be successful? I don't know. Nobody knows. It's just we have to see that we stack as many favors as possible. And there's one technique that we can use to analyze this even further. And again, that's not foolproof too or either, but it's again helping us to stack a little bit of probabilities. And what I like to do here is I want to see that as price is approaching this level once again, I want to see what's being called convergence in my indicators. I just have MACD and RSI on my charts here to look at those charts and look and scan for convergence or divergence as price is about to break out of this level. What is convergence? Well, you can see when price made this low, MACD had a certain value. When price tested this level for the second time, MACD had another value. And as price is now about to test this level, maybe for a third, maybe even for a 4th time, MACD will also make a low. And what I want to see is that the lows for each of those tests, but at least for the last one, are able to make ultimately also new lower lows. I want the new lower low in price when price is finally about to break out below this line, hopefully giving me that large red candle, price pushing lower. I want to see that MACD and RSI are converging. They're giving me another new lower low in MACD and another new lower low in RSI. You can think of this convergence, divergence pattern as something like an X-ray. From the outside, everything looks really nice. But now you switch on your X-ray machine and you just look inside. And there you can see if that bone has some kind of structural issues. And here we can look inside and see if that move higher, if that trend is still strong, or if that move higher has some potential issues. Let me switch quickly here to the S&P 500 and switch here to the weekly chart, because I think we can see this quite nicely here on the weekly chart of the S&P 500. What we can see here is that price is making higher highs and higher lows all along the way. And sure enough, every time that price makes a new higher high, let's just draw that in from this higher high to this higher high. Obviously, the trend line goes up, it's a higher high. And if at that same point in time, I jump down here to my high in MACD and draw to the same higher high here, looking good. Looking nice, looking strong. Those higher highs are confirmed. So the next major move from this high to this high. Yes, it's a higher high in price. Otherwise, that line wouldn't be sloping up. However, if I take this higher high and combine it with that higher high, same points in time when price made this higher high, I now have a clear divergence. I have a clear divergence setting up here, and this can be thought of as an early warning sign. Does this mean price has to crumble? The market is heading for disaster for sure. No, absolutely not. It's just this A picture that I like to use is that of a rocket launch. You're sitting in the launch room. You see all those indicators, all the warning signs and everything, all lights green, everything is a go. And then suddenly at that stage, you can see, wait a minute, that fuel pump, the fuel injector in rocket chamber 5, this one has gone from green to yellow. Something appears to be off there. Does this make sense? Or is it still possible that the launch will be successful? Might be just a bad sensor reading. I don't know. Would I risk, however, my, I don't know how many millions pounds rocket on this could work, yes or no? No, absolutely not. Personally, at that stage, I would cancel the launch. And it's the same thing here. If I see this early warning sign, I would become very reluctant to initiate new long positions. And for the breakout trade, if I see something like that, that trade is off. For our momentum breakout strategy, I must have convergence on the breakout. If I don't have convergence, that trade is definitely off. For our other strategies, convergence is a nice bonus factor, but for the breakout strategy, I must be able to see convergence on the breakout. And this can be a little bit tough to spot because obviously the market is pushing sideways and it's becoming quite close here, and we will have to see and be precise. This is a little bit difficult to spot, but this is what I'm looking for. And avoiding false breakouts, is that a perfect remedy? Of course not. But paying attention that I have convergence on the breakout eliminates a fair share of false breakouts. So helping me definitely to stack the odds in my favor here, big time. Just looking at the question, but I think so far we are good. Now, the question is, how much would I risk on that trade and why? Just a moment. I think about having a one-to-one profit target on that trade. And this means with this stop loss location, I would be looking into taking either the whole position off or locking in at least some profits around pretty much this price level. The same distance here to the same distance here. So the question is, how large should I trade that trade? How many shares, how many lots to actually trade in those markets? It's a multi-step process here. And the first part is always, how large is my account? Let's just assume my account has been funded with £10,000. What I want to do is, if this trade doesn't work out, I'm willing to risk 1% of my account. So if this trade does not work out, 1% of £10,000, £100. And now the question that I have to answer is, all right, if I enter, sell short the market here below this price level, and my stop is I'm closing that position here, how many lots may I trade so that a move from this entry to that location being stopped out equals £100? And this probably won't be too large because the distance is rather large. However, if we do get a few more bounces here and I'm able to pull in my stop loss to say something like this here, now obviously the answer to that question, how many lots can I trade so that entering here and being stopped out here equals £100, is now probably something like twice to 2.5, 3 times the size which I had when I considered to take this stop loss location. Guys, this whole risk management part and position sizing is really crucial, and we should be focusing on that in another webinar. If you want to learn more about that, please, by all means, let us know in the survey coming up after this webinar. This is a truly critical and crucial part because risk management is for survival. It doesn't make any fun, but the good news is it's the simplest part of the whole trading the whole trading strategy shebang, it's all about staying small, having a repeatable process, and making sure that if this trade doesn't work out, I will still be here tomorrow. I will still be able here to trade and try again tomorrow. And this is what risk management and position sizing is for. And this is something that you have to get right with the very first trade, because otherwise one bad trade and your account can be gone. So I can't stress this enough. Focus on risk management first. Just looking at the questions, but again, I think we're good. And just a quick reminder, if something is not clear, if you want to focus on some other aspects, by all means, just let me know. Let's have a look at the US dollar against the Mexican peso here. What is it that I see here on the daily chart? Well, I can see price has been moving sideways. Those moving averages have been pretty much all over the place here. However, just recently, yes, 200 below the 50, 20, 10. It's a little bit early to actually call this a beautiful downtrend here. Yes, it's a lower high. We have yet to see this another lower low compared to this one. I hope you can see that while technically this is a downtrend, and again, let's make it larger. While technically this is a downtrend, it's far from being the strongest downtrend out there. Moving average is pretty much going sideways. Deep pullback at that stage here, way beyond the moving average sell zone. Let's talk about the moving average buy and sell zone here for a moment. I mentioned this fanning pattern in my moving averages, and zoom out again. We use not only this fanning pattern to help us to identify if there is a good, strong trending market, but also we use the 10 and 20 period moving average to help us to identify, let's call it, good deal areas. I don't want to buy a market just because it's going higher. I don't want to sell a market just because it's going lower. I want to get a fair price. And this fair price, I have some tools to help me find those. And one is this area between the 10 and 20 period moving average. Because if you see price is pushing higher and it's coming back to catch its breath, where's it pulling back to? Well, somewhere around my 10 and 20 period moving average. And the next move higher and price is coming back to catch its breath. Once again, where's it pulling back to? Into a moving average buy zone. And again, and again. And if price is pushing lower, you also happen to get those pullbacks here to the moving average sell zone as well. So price equilibrium levels, good deal areas, we can use the 10 and 20 for that. And so every time I get a pullback way beyond the zone, this means that probably the trend might be running out of momentum. Definitely some momentum has been lost. Probably we will see divergence at that stage in our indicators as well. And for that reason, not the best sign for trend continuation. And so, yes, deep pullback might not be the strongest one, but overall, the daily here has some, at least a little bit of bearish vibe, if we want to put it like that. Now let's drop down with our time frames, and we start to see what was just a beautiful, or not so beautiful, rather early stage move to the downside on the daily chart is now on the 4-hour chart already a way more established downtrend. That's a little bit advanced topic, but get a feeling for how those different time frames actually connect to each other. If the daily is looking like that, what does probably the weekly chart look like? What will probably the 4-hour chart tell me? And what can I see on the 2-hour or the hourly chart? And a nice thing that we can see here are our pivot points that I just had linked in the chat box in the beginning. Pivot points are another leading indicator. Leading indicator means I'm not late to the party. If I want to trade the crosses of my moving averages, that's usually a lagging indicator, a lagging way to use moving averages. The famous golden cross, the 50 period moving average, is crossing above the 200 period moving average. Guess what? The 50 red is crossing above the 200 right about here. That's your long entry signal here. Guess what? You would have wanted to be long here. Way late to the party. Doesn't make any sense to trade that way. Instead, I want to have an idea about what the future might be bringing. And a beautiful way to do that are pivot points, because in order to calculate today's pivot points, I just need yesterday's price action. So with the price action of today, I'm already able to calculate tomorrow's pivot points. Leading, I have an idea what the future might be bringing, and I find it really truly fascinating. You see those lines, they have been drawn the moment this session ended. So I knew upfront those levels, and just look where and how often those levels really, the market adheres to those levels. Does it work all the time? Obviously not, absolutely not. Does it give me an edge if I combine it with other probability stacking techniques? Oh yes. So if you can, try to use those pivot points here as well. Put them into your toolbox, just put them on your chart and see where you can use them, how you can use them. Another great idea or usability might be if you want to look for potential profit targets. If you find a potential profit target where this one of those pivot points aligns with the profit target, might not be a bad idea to take profits there. If my horizontal line of support and resistance happens to sit just on top of such a pivot point, guess what? That line just has become more important as well. Stacking odds, stacking probabilities. So what do I see here on the 4-hour chart? Price is pushing lower, and again, I was able to draw those lines once the previous day's session ended. Guess what? Using this one, I was able to nail pretty much the top of today's session, and when price started to drop, it dropped here to the daily support 3 level. Almost, yeah, I think pretty much by a pip. Perfect touch here as well. Just keep that in mind. Downtrend, price is pulled back to my moving average sell zone. Price is pushing lower again. I have convergence currently here in this market. So the 4-hour chart clearly is pushing lower. And if we drop our time frames even further, what is it that I see here on the 30-minute chart? Price is pushing lower, pulling back. Where is price right now? In the moving average sell zone, giving me a small bearish candle. Maybe I obviously have to wait for every candle to finish printing. Jumping the gun doesn't make any sense. You won't believe me how often within the last 10 seconds of a 4-hour candle, the structure of this candle changed completely. And I felt, all right, those 10 seconds won't mean a thing. Let's just open that position right now. Yeah, within 10 seconds, the whole setup was gone, and suddenly I no longer wanted to have that position on. Always wait for that candle to finish printing. And in preparation for this session, I had looked also at the 5-minute chart. And on this 5-minute chart, what we can do here is you can also start to put in, obviously, when I prepared for that session, 5 minutes were way back then, so a lot happened since then. I find this level of support resistance here. A few touches there, second or third precise touch here. Price is approaching this level again, and price is about to break out here. How could this be traded? Well, first of all, where would be my entry? Well, the entry would be this level. Where would be my stop loss? My stop loss would be above the swing point high, which would be roundabout here in this area. Nice bonus point here. That stop loss location is now also supported here by that pivot point. Where would be my first profit target? 1-to-1 distance, which means round about there should be my first profit target here on this breakout to the downside. Now, let's assume we just missed this entry here. Price is pushing lower and we are not in the trade. Something went wrong. Usually, there's always some kind of follow-up trading opportunity because price is now broken out. The downtrend has resumed. We still see the fanning pattern in our moving averages. Now price is pulling back towards the moving average sell zone. I know that price has a decent probability of finding resistance here around this pivot point. And by the way, that level is still working now in our favor. And what we can also do is pick our fib retracements, and from the swing point high to the swing point low, we just draw our fib retracements. And now we can see that the 50% retracement sits almost perfectly on top of the pivot point, and the 38.2% retracement sits almost perfectly on top of the level which we have just previously identified. What is the sweet spot for a pullback with regards to fib retracements? The sweet spot is the 50 to the 61.8% retracement. And so again, guys, I hope you can see that this gathering advantages, now suddenly the picture starts to come together. The daily chart was telling me, yes, the market is going lower. Not strongly yet, not perfectly yet, but yes, the momentum is to the downside. The market had been going down for quite some time, and now it looks like it might be picking up momentum again. Next thing, 4-hour chart, much cleaner, much smoother downtrend, much more tradable than the daily chart. And dropping down even further on the 5-minute chart, here is my breakout trade. And do I get convergence? Well, I can see that momentum is picking up here again, and from this one to this one, the line pretty much is flat. So is it perfect convergence? No. Is it diverging? No. Good enough for me. I want to enter that trade here. And now the price is pulling back. Where is it pulling back to? It's pulling back to a sweet spot. And we used the moving average sell zone. We used a 50% fib retracement. We used the pivot point. We used the horizontal level of support and resistance. All those things coming together, telling me that, yeah, if price hits this 50% pullback, I could be waiting here now with a sell limit order. Because I think I've identified a sensible area for that pullback. Where would my stop loss be? My stop loss would still be above the swing point high. 50% retracement, I would be triggered into that trade. Same logic on how to trade that position. I would be going for another 1-to-1 profit target. So that pretty much the same distance here would mean I would be able to get for this pullback trade, I should be able to get my profit target on that one pretty much here around those levels. Something like that. Let's put it that way. Guys, does this stuff make sense? And Smarty is asking whether there was a recording of this webinar. Absolutely, there is. We will be sharing that recording with ATFX. I'm not sure what they will be doing with it, but usually it will be shared with you in a follow-up email following this webinar within the next, let's say, 24 hours. So you should be good to get access to the recording there. Guys, does this stuff make sense? It's not about one market. It's not about you want to get a feeling what the market is doing, and you get that from the chart, because people have to show their hands when they initiate their positions. They have to show their actions. And now I know what the market is doing, and then stacking odds, combining different time frames, and making a case of why this might be a nice trading opportunity, and then immediately following up what might be another trading opportunity. We have the question about more examples. Unfortunately, time is already running pretty short. I feel it always makes more sense to discuss why we're looking at certain charts in certain markets than instead of trying to just, there's the setup, and now have a lot of fun. I want you guys to actually be able to catch fish yourself. Handing out fish, I think, is rather boring. All right, so other nice market, Australian dollar against the Kiwi dollar. Beautiful trends for quite some time. What's going on with this candle? This has to be some bad data point, right? We have to ignore this long lower shadow. Actually, if you compare the data across different charting platforms, some poor soul actually decided to sell this market back down here. So definitely there have been trades around those levels. Yes, this was a flash crash. Yes, it was over within a flash. But overall, yes, it's on the chart. It happened. Some poor soul is left with a losing position since then, or has been stopped out since then. Another guy is having a nice winner on their hands since then. There have been trades at those levels, and for that reason, it's a valid point. It has to stay there, and definitely we have to consider this long lower shadow here. By the way, the longer this shadow to the downside here is after this move down, the more bullish the impact is. And sure enough, price started to rally here a bit before resuming the original downtrend. However, just recently, what can we see here? Price pushed higher. It pushed way beyond the sell zone and started to make new higher highs. And now the 10 has crossed above the 20, and the 20 is about to cross pretty fast across above the 50 as well. So do we have to wait for pullbacks here to the buy zone in order to trade the Aussie against the Kiwi at all? No. This market is pushing higher. It's looking good. It's looking strong. What is the 4-hour chart giving me? Well, guess what? Here I already do have that structure that I'm looking for. Higher highs, higher lows, good strong trending environment, clear fanning structure in my moving averages. And once again, please pay attention to how very nicely, almost magically, those pivot points are being paid attention to, and the market adheres to those. Again, they are not painted in hindsight. Leading indicator, today's price action allows me to draw tomorrow's pivot points up front. Powerful stuff. Doesn't work all the time, but way better to have it on my charts than not. And again, what do we see here? Well, it's not perfect. But again, what is it that we see here? Well, price has been pushing sideways for some time. Do I find a perfect level? Not perfect, but yeah. What is it that I see before the breakout here? I do see small bullish candles. Remember this idea that pressure is building up, that volcano top is about to blow off. And this is I only get this pressure with this series of rising higher lows. Price is pushing against this level, and here is the large breakout candle. And guess what? The breakout, we're breaking through the level. There's the pivot point. Things coming together once again. Perfect storm, perfect setup here. And sure enough, as price is about to break out, guess what? MACD is about to make new higher highs. And Christopher is just asking about the RSI. We use the RSI in just the same way that we use also the pivot point. So while price is about to move to the sidelines here, you see every touch here of this level. Pretty much RSI stays stable. Difficult combination. And as price is about to break out, RSI breaks out as well to make new higher highs. This is convergence. This is strong. This is as strong as it gets. Again, have a look at the higher time frames. Find those markets where you think something is moving, something is going on. And then drill down with those time frames and find the perfect setup on those lower time frames where you can gather as many advantages as possible. MACD, RSI, I just use them to scan for convergence, divergence. I do not care about overbought or oversold levels. I do not care about the signal line crossing the trigger line or other way around. It's always just there for convergence and divergence. All right, guys, time's pretty much up. So let's quickly head back here to our slides. And yeah, all those markets that we covered here today and many more are, of course, tradable at ATFX. So just in case you haven't opened that account yet, why should you consider ATFX as your broker? Dedication not only to providing you guys great market access, giving you a good, stable trading environment. A part of that is obviously to be well within legal boundaries and being as transparent as possible. ATFX is regulated by the Financial Conduct Authority, FCA. You see the license number here. Don't risk your money with any shady companies, corporations sitting in some dark place of the world where there is not really clear-cut access and the legislation is not clear. It doesn't get any more transparent here than with the good old FCA. An efficient, secure, easy to use payment portal. You want to fund and withdraw funds from your account as well. ATFX is committed to providing competitive prices for our clients. Trading is a business. You want to keep those costs low. ATFX definitely do their very best to help you with an optimal cost structure there. MetaTrader 4, you've seen the platform. I think it's a nice platform. Is it the best charting platform out there? I prefer others. As soon as I want to combine different analysis techniques, do my own indicators, and so on, MetaTrader 4 is absolutely awesome because you can code your own stuff. You don't like the way that those pivot points are being drawn, you can just jump into the code. The source code is included with the link that I gave you. You can just jump into the code and do pretty much everything on your own. This is pretty hard to beat. Bespoke customer service and trade support for all client trading needs 24 on all weekdays. And yeah, the effort shows. Industry-wide recognition, winner online personal Wealth Awards 2018. And guys, if you happen to have any further questions, here are different ways to be in touch with ATFX and yeah, get your questions answered from them as well. You see, in the heart of London, you have the postal address, numbers to call them, email, websites. If anything is not clear, by all means, reach out to them. They are more than happy to help. Talking about being more than happy to help, if you guys happen to have any further questions, absolutely sure, and not sure, I know that I'm more than happy to help you there as well too. Those of you who have to leave, thank you very much for tuning in. Sign up for other upcoming webinars as well. I think there's a survey coming up after this session. Any feedback that you have for us, be totally awesome to get. If you liked the session, yeah, sure, we like to hear that. If you didn't like the session, even better, because then you can tell us what it is that you didn't like and how we can improve. We're running those sessions for you, so by all means, please do give us that feedback. Guys, Ankit, thank you very much for the kind words, really appreciate it. And yeah, guys, now to all of you, as there seem to be no further questions, to all of you, a very nice evening or good morning or wherever you're located. And yeah, happy trading over those next few days. And I'm already looking forward to talking again with you pretty soon in the future. So thanks again for tuning in and bye-bye.